that we all have to be looking at. So there will be exercises for us to do, as well as to there will be uh, uh, questions online for you to go and answer. So you coming to do foundations of accounting one, it's not going to be an easy task. You have to involve yourself in the activities. And I believe that after involving yourself in all the activities, accounting will be simple to you. So, for the purposes of me uh, teaching this class, we sent to all groups or to your pages where you can download the reference material for this course. I would not be going through the details because that model is meant for your revision, but I will be teaching the course here for you to get the concept very, very well. So if you have any question, I'll be very grateful if you raise up your hand, and if I catch your attention, then I will call on you, then you ask the question. So that is how things are going to be here. Now, when you heard accounting for the first time, some of us were afraid. They asked themselves, hey, UCC, you are going to do accounting. Someone say UCC is very, very difficult. Oh, yes, some people have said it. But we that we have been to UCC, we have passed through and realized that things are not difficult unless you decide to make it difficult for you. So you can easily pass this course if you work the examples the teacher shared with you, as well as to you are able to search for information. Search for information. So note that for this course, what we are going to do is that we have to search for information. You should be able to search for information. So the use of AI is encouraged in this course to be able to search for information and get the understanding. So the use of Google search is also very, very key to this course, because everything that we do, we need to understand it very well. So I'm setting the point for you to understand that for this course, some point in time, I will task you to search for information on your phone. Then you raise up your hand, then you share with me what you have shared. You have searched for it, and then we will all understand the concept. Some point in time, I will task you to go and watch video on YouTube also to understand the concept. And then some point in time too, I will share with you questions for you to solve. And then you take a snapshot and share with us on the screen. So that is what is going to do for real. And I believe that where all these things set, we should be able to pass and pass very, very well. We should be able to pass and pass very, very well. So coming back to since I have set the rules right, it is now time to know who is behind the screen and who is talking. So as I said, I am Emmanuel, and my so I'm the one talking that you are seeing. So I'm the one over here who will be your facilitator for this course. And I'm trusting that you should all be able to go through this course and understand the issues. So the first thing I want to ask is that when you heard accounting, What came into mind? That one, keep it for me. I'll later ask for it. When you heard of accounting, what came into mind? That is the first thing. But kindly note that in our daily life, we all do accounting. In our daily life, we do accounting. What are some of the things that we do? In our daily life, we have money on our pocket, and then we decide on, today I'll buy this. Today I'll buy this item. I'll buy a bundle. I'll buy airtime. I'll buy this food. This is what you decide. Then in the evening, you ask yourself, hey, today, what did I buy? Okay, I bought bundle. I bought airtime. I sent airtime to my friend. I call. I lent money to one of my friends. Then as well too, I bought food. So in the evening, you sit down and you reflect on the things that you have done. One or the other, you are trying to calculate all the monies you have spent, and you are telling yourself how much you spend for the day. So as you are thinking through it, you are trying to account to yourself. So every day we do accounting in our lives. It's just that some of us try to do paper and pen in doing that, in checking what we have done. Others also try their possible best also to sit down and to recollect whatever they have done. So that is what happened. So anytime we have that, then we are saying that you are doing account. You are doing account. So accounting also can also occur from the Bible's point of view, where people were given resources, talent to go and work with, to go and then apply. Someone worked with the 5, had additional ones. The other worked with 3 or 2 and had additional one. But the one we gave one to the person, that person didn't do well. The person went to hid it. So when the owner came and then asked, please, where is the talent that I gave you? How were you able to use it? The person was not able to tell the story. So in that case, we will say that the person couldn't utilize the talent very well. So that is what you must understand. So anytime you are having a talent, what happens is that you expect that you utilize it well, so that it will benefit the people who also gave you the talent. Yes, someone want to ask a question. So ask, let me, yes. Daniel, please, your hand is up. Okay, that's fine. So that is what happened. So this course, we want to learn introduction to accounting. Now, for the purposes of re-understanding, for this semester, there are a lot of things we'll be doing. We'll be talking about the definition of accounting, bookkeeping, accounting, accounting processes, purpose of accounting, qualities of accounting information, limitations of accounting information, branches of accounting, and users of accounting. Now, this is just the outline for this week. But when I start the process, by the end of the period, what do I expect? Kindly note that if someone is a sole proprietor, if someone owns a business, so let me pick owner of a business. So owner of a business. If you have an owner of a business, the owner of the business needs to know whether he has made a profit or he has made a loss. If the owner wants to know whether he has made a profit or he has made a loss, what does he do? He tries as much as possible to know what he purchased. So he knows what he purchases and what he sold out, that is sale. So what he sold out and the goods he purchased. Then you will say that, okay, if I want to know my profit is just the ones I sold out minus the ones I bought. So purchases means the person bought them. So the goods I bought, if I take it out from the ones I sold, I will get a profit. So every business is interested in a profit. Every business is interested in a profit. So how do the owner of the business know that, okay, I sold these goods out and I bought these goods? It's like the woman at the Mokola market. When she goes to buy the goods, let's say she buys the onion from Burkina Faso, the car will bring it. When the trucks brings it, it will now sell to individuals. Some of them sell as wholesale. So he bought the onion from what? Burkina Faso. That is bought purchases. That is bought purchases. Then he also tries and say that, okay, I will sell the onion to people. So at the end of the period, the person will be saying, the owner of the business, the market woman will be saying, okay, did I make a profit or did I make a loss? So in that instance, as the person is taking through what he has done, he's trying to account for whatever happened during the day or whatever happened during the week. That is what is happening. So whatever happens, he should be able to tell us that he bought from Burkina Faso and sold this. So a sole proprietor should be able to tell us that this was my profit. That is what you must note. Now, if you are a shopkeeper or if someone is a shopkeeper, the person needs to keep records. The person needs to keep records, so keeping of records. If the person is keeping records, the person will be recording all the items that took place. So, for example, maybe he sold 10 tomatoes, so a shopkeeper, 10 tomatoes for 15 cedis. 15 cedis. Sold a cup of rice for 10 cedis. And the person is recording. Sold a tinapa for 15 cedis. So when the person is recording the items, when the person is recording the items, what happens is that the person needs to ensure that the person should ensure that or whatever he or she is buying or whatever he or she is selling is able to keep the records. So when the person is writing, I sold tomatoes, I sold a cup of rice, I sold tinapa. When the person is recording all these things, we are saying the person is keeping records. The person may have a notebook, so the person is keeping records in a notebook or maybe a diary, so that when the owner of the business comes, he or she can show to them, please, I sold this. I sold a cup of rice. I sold tin tomatoes. I sold tinapa. That is what a person does. When the person is doing this, he is doing a portion of accounting because he is keeping records. Now, when the owner came, he decided to tell the story. So when he's telling us, he's telling the owner that, so the owner of the business, so this is what the sales girl did. So this is what the sales girl did. So when the sales girl met the owner of the business, that is the owner of the business, what I have highlighted, yellow. The sales girl showed all these transactions in red to the owner and told the owner that today, on Saturday, 24th January, I sold tin tomatoes, 15 cedis. I sold a cup of rice, 10 cedis. I also sold tinapa, 15 cedis. So when we add all of them together, the money I am having in my hands now is what? Is 40 cedis. So when the sales girl is telling the owner of the business that I have been able to sell this, when he's telling that, he's reporting, he's giving an information. So that he gave an information. So sales girl gave an information to the business owner, to the business owner. So because he gave the information, what information did he give the business owner? She told the business owner that I sold 40 cedis for the day. So when you are giving an information of what has happened, when you are giving an information of what has happened, what it means, you are accounting for whatever has happened for the period. So the sales girl did the recording and later went to inform the owner of the business what has happened. So some point in time, she recorded. Some point in time, she gave an information out to the owner. So when she's giving an information to the owner, she's also doing an aspect of accounting. So when we say accounting is recording of business transaction, and the reporting of financial information. So this is what accounting deals with it. You see that the sales girl was recording in the notebook. So that is one aspect of accounting she's doing. And when the owner came, she now reported, she now communicated what has happened. So it means she's doing reporting. So the 40 cedis is the financial information that she is reporting to the owner of the business. So when we say accounting in simple terms, it means is the recording of business transaction and the reporting of financial information. But then what happened here is that okay, so what happened is that if we are talking about accounting, this is what happened in accounting. You record the business transaction. Now, when I was talking about the business transaction, I was talking about monetary items. I never said someone came to the shop and came to stand there and said you buy tin tomatoes and the person didn't buy. No. I only recorded whatever has happened. I only recorded whatever happened. And the recording was that I recorded the tin tomatoes and I recorded the pack of rice and I also recorded the tinapa. So when I was recording, really like this, you can see figures, 15 cities, 10 cities, and another 15 cities. So accounting, we only record monetary items. So if there is a business transaction and that transaction cannot be a monetary term, we do not record it. So accounting only deals with what? Monetary items. And then you report. So that is what account. So what we are going to do this semester is about how do we record the transaction? That is what we are going to learn. And how do we report the financial information? That is what we want to understand. Now, let us learn, since we now know what goes into the accounting. If you go online and you search the definition of accounting, you will get a lot of information. For example, you can search, but I'm also searching here, and then I will copy that and share on the screen. Definition of accounting. You can also do your search on Google. Just write definition of accounting, and then it will tell you. So I'm going to share that aspect of the screen for you to see the aspect of the search that I had for you to see. So we are all seeing, I just search. And this is the definition of accounting. When you search online, this is what comes. That's why I'm saying I'm going to encourage the searching of information. Now, when you search online, they said accounting is a systematic process of recording, classifying, summarizing, interpreting, and entities' business financial transactions to provide insight into its economic health, supporting informed decision making for managers, investors, and regulators. Don't worry about all of them, but pay attention to this. They said recording. That is the key word I want you to understand. That in accounting, you need to record. You need to record. But before you can record, so let me go back to my slides for you to continue. This is just a search of which everyone can easily search on the internet. So we saw recording. We saw recording. We saw classifying. We saw interpreting. So let me start by saying that in accounting, we do recording. In accounting, we do recording. Please, can you all see what I've written, the recording? Right. If I'm typing, it's not appearing. Okay, so hold on. Hold on, let me check. Okay, it's now come, so you can now see it. Right, thank you all. So accounting deals with recording, but before you can record, you need to identify whether it is a business transaction or it's not a business transaction. So first, if you are doing accounting or if you want to record a transaction, you need to identify whether what you want to record, is it a business transaction or it's not a business transaction. So you need to identify the business transaction. Note that. So, for example, like the woman, the sales girl who sold 10 tomatoes for 15 cedis. That is the business transaction. It has occurred. So that is what you need to do. So you need to identify the business transaction. So if you are able to identify the business transaction, then you can now go ahead and then record it in the books. So before the recording even will come, you need to identify and see whether indeed it's a business transaction before you can record. If you're not able to identify, you cannot record. Now, when we are recording, we record it in a special book. So all recordings are done in a special book. And the special book is called journal. So they do the recording in a special book because when you read online, they said accounting is a systematic process. It means you need to go through some procedure. So if you are recording, you record them in a special book. And this special book is called journal. Some people call it book of prime entry. Book of prime entry. Others also call it subsidiary books. Some people also call it day books. So what it means is that if a transaction takes place today, you record it in that book. That is what they're recording. So at the initial start, you see when the sales girl sold the tomatoes, 15 cedis. So record it in a journal. There are several types of journal. So the word is called journal, but there are types of journal. And the types of journal, we can have sales journal. We can have purchases journal. You can have purchases journal. You can also have what we call return invoice journal. And I will explain all of them. Return invoice journal. We can also have what we call return outwards. Return outwards. I will explain each of them, but you need to note them down. Journal. So we can have sales journal 1. We can have purchases journal 2. We can also have the general journal 3. Sorry, 5. General journal 5. We can have cash book. Cash book. We can have petty cash book. They are all journal. They are used to record transactions. So when we happen to enter into a transaction, we record them in the journal. Now, when we say the word journal, what does it mean? In the course of the study, I will tell you that journal is a document that records transactions in a chronological order. Journal is a document or a book that is used to record transactions in a chronological order. When we say chronological order, what it actually means is that today is 24th January. In the morning, they sold tin tomatoes, the person recorded. In the afternoon, they sold they sold a cup of rice, the person recorded. In the evening, they sold tinapa. So you see that the person is recording the transactions in that order. When you are recording transactions in an order in that book, we do that because that journal records transactions in a chronological order. So note that. You can write it down and go and search for the meaning of it. Now, with sales, when we say the word sales journal, what it actually means is that it is used to record all transactions that involve sales. So all the goods you sold to people on credit, all the goods you sold to people on credit, we record them in the sales journal. So if today you sold goods to Antimansan, someone came to the shop, you sold goods to Ekia, another person came to your shop, you sold goods to Yao. So as you are recording it one by one, that is the people you sold the goods to, we record them in that book called the sales journal. So you record them in that order, chronological order, as and when it happened, then you record. Now, there is what we call purchases journal. The purchases journal is used to record transactions that involves credit purchases. When we say credit purchases, what it actually means is that you went to buy the goods on credit basis. Selling is different from buying. When you sell the goods, we call it sales. When you buy the goods, we call it purchases. Note that. So when you go and purchase from Unilever Ghana, you purchase something from Gapsem, you purchase something from Nestle Ghana, you purchase something from MTN, and you didn't pay for it. You said you pay them later, or that is, you took them on credit. So you took them on credit, say you pay them later. Those transactions, we record them in the purchases journal. That is where the recording starts. Then, yes, James, your hand is up. James, your hand is up. Okay. All right. So James' question was that if you purchase, if you go and the sales purchase journal is used to record purchases on credit. What about if someone comes to buy from you? If someone comes to buy from you and the person's bought it on credit or the person buys with cash, how do you record it? So with a sales journal, it is used to record only credit sales. Those people you sold goods to them and they didn't pay for it, they said they'll come and pay later. So if someone's daughter is going to school, the person came to your shop and said, oh, my daughter is going to SHSO. Please, can you give me this Can you give me this? At the end of the month, I'll come and pay you. So when the daughter came to you and then you gave the things to the daughter and the daughter went sent away, you have sold the goods on credit. So you record them in the sales journal. But when you go to Makola Market and you go and buy on credit, you will come and record it in the books called purchases journal. That is what you must note. Now, return invoice journal. Okay, Felix, your hand is up. Okay, so Felix is asking that if he has a product with him, then the products are ready for sale. If you have not sold the goods are with you, you are going to keep them in your inventory. But then remember that you went to buy the goods from somewhere. The question is that, did you buy the goods on credit or you bought the goods by paying cash? If you bought the goods on credit, then I will say that the goods should be recorded in your purchases journal. But when you pay the goods, when you buy the goods by paying cash, then you record them in the cash book. So anytime you go and buy something and you pay cash or you pay with a check, you record them in the cash book. But when you go again and sell something to someone and the person pays you cash, we are saying that that one should be recorded in the cash book. The sales journal and the purchase journal in the cash book, yes. The sales journal and the purchase journal is used to record transactions. In the purchase journal and the sales journal used to record only transactions that are credit. But the one you paid with cash, you record them in the cash book. Helena, your hand is up.
Yes, sir. I want to find out. Can you also say that the goods you bought on this thing with your cash, can you write them as your own as expenditure?
Thank you. So Helena is asking that if you bought goods and you paid with cash, can you record them as an expenditure? No. The goods you bought with cash, they are not expenditure. Later on, I will teach you that the goods you bought, anytime you hear goods in accounting, it means if you are going to buy the goods, whether you paid with cash or you took them on credit, they are called purchases. Again, I'm saying that if you buy goods in accounting, you bought by paying cash, or you bought goods by on credit. You bought goods on credit. If you bought goods on credit, they are also purchases. They are purchases. If you buy goods by paying cash, it is also purchases in accounting. So in accounting, when you buy goods by paying cash or you paid by a check, it is purchases. When you bought goods on credit, it is also called purchases. But note that the one you bought on credit, it will be recorded. It will be recorded in the purchases journal. Note that. But the one you bought with cash, will be recorded in the cash book. So this is what you must note, that when you buy something on credit, you record them in purchases journal, but they are all purchases. When you bought something with cash, it's recorded in the cash book. That is what you must note from here. Again, if you sold goods, so note that if you sold goods, so sold goods on credit, in accounting, they are your sales. You sold goods, sold goods by cash, or you receive cash. That one too is sales. So the word you sold goods made it sales. Whether it is by cash or by check, in account, we call it sales. Note it. You don't leave it like that. It is something you must hold it as such. That if you buy something on credit or you pay with cash, it is purchases. When you sold goods on credit or you sold and the person gave you cash, it is still sales. But note that when you sold goods, on credit, it will be recorded. It's recorded in the sales journal. In the sales journal. Note that when you sold goods on credit, it will be recorded in the sales journal. Note that. But when you sold goods and you took cash, it will be recorded cash. It will be recorded in the cash book. In the cash book. In the cash book. That is the difference between the two. So watch the screen and then be careful about all the information I'm giving you. That if you bought goods, watch the screen. That's why I'm saying that all the questions that want to come, make sure that it doesn't fall outside what we are doing, to fall within what we are doing. Okay, because I'm saying that if you are watching the screen very well, the goods you sold on credit, whether by cash or with credit, they are sales. It is established. If you bought goods on credit, whether by on credit, or you bought goods by paying cash or using a check, it is purchases. That one too is established. But note that the one you bought on credit, you record it in the purchases journal. But the one you bought with cash is recorded in the cash book. The one you sold on credit is recorded in the sales journal. And the one you sold and you took cash is recorded in the cash book. This is very simple that you must take. So if you are paying attention very, very well, this is what is happening. Okay. So now, Amanda, your hand is up. Yes, madam, that is it. Thank you. Please, I'm saying that don't be using the book as it stands now. Watch the screen. When we are done, you go back and then you will check what the unit we are. If you are using the unit, I'm explaining everything. I'm explaining the concept. So please pay attention. Now, going back, The return inwards is used to record goods that were returned back to the business. The return inwards journal is used to record goods that were returned back to the business. So, for instance, I sold something to Amanda, and Amanda said that, oh, sir, the goods you sold to me, they are not good. They are not of right quality. I want to return them. If she returned the goods to me, I'll record it in my book called Return Inwards, because she has returned the goods to my premises. I sold the goods, so I'm the owner of the business. If someone returns goods to me, we record it in the Return Inwards journal. When I go and buy something from Emmanuel Misa, and I told Emisa, when the Emisa gave the goods to me, I bought from him. When I bought the goods from Emmanuel Misa, I realized that the goods was of defect. So I have to return the goods to Emisa. When I am returning the goods to Emisa, that recording will be done in the Return Outwards journal. I'm saying it again. I'm saying it again. I'm saying it again, that if I bought something from Amanda, if I sell something to Amanda, and Amanda is my customer, and I'm returning the goods to Amanda, I'll record it in my book called Return. I'm returning something to her. If Amanda bought something from me, if Amanda bought something from me, and Amanda is returning the goods to me, when she returned the goods to me, I'll record it in the Return Inwards journal. But when I buy something when I'm going to buy, and I bought it from Emmanuel Emisa, and when I realize that the goods are not good, I'm returning the goods to Emisa. What it means is that I'll record in a book called Return Outwards. That is it. That is what you must note. So, some point in time, you'll be returning the goods to someone. When if the business is returning the goods, we record it in the Return Outwards. When they are bringing the goods back to the business, we record it in the Return Inwards. James, your hand is up again. Any question? If not, kindly drop your hand, please. Thank you. Thank you. So, right. So, thank you. So, James is asking whether can we call the Return Inwards journal sales returns journal? Yes, we can record it. We can call it that name. And can we call Return Outwards purchases returns journal? Yes, we can call it the same name. Purchases returns journal. We can call it that way. So sales returns can be Return Inwards journal. And then purchases returns also can be Return Outwards journal. That is it. Now, you heard me saying cash book. Cash book is used to record only cash transactions and bank transactions. Cash book is used to record only cash transactions and bank transactions. So if you go and put money at the bank, you record it in the cash book. If you receive some money from someone, you record it in the cash book. If someone pays you with a check, you record it in the cash book. That is what it means. Now, we also have the petty cash book. Now, the petty cash book is used to record petty transactions. So petty expenses you made. So petty expenses made by the business. What are some of the petty expenses? You went to do a photocopy, you paid for it. you record it there. You bought airtime, you record it there. You took TNT for TNT, you record it there. You went to buy a pen, you went to buy correction fluid, you went to buy ruler, you went to buy eraser. They are all petty transactions. And because we paid for them, we record them in the petty cash book. So all the petty expenses made by the business and they paid for it, we record them in the petty cash book. And the general journal is a book that is used to record all other transactions that cannot be recorded in the other journal. Again, general journal is used to record transactions that cannot be recorded in the other journal. So all transactions that cannot be recorded in the sales journal, cannot be recorded in the return invoice journal, cannot be recorded in the purchases journal, cannot be recorded in the return outwards journal, cannot be recorded in the petty cash book. We record them in the general journal. So anytime a transaction takes place, we record them in the journal. Anytime a transaction takes place, we record them in the journal. But then, if a transaction cannot be recorded in the sales journal, in the purchase journal, we now record them in the general journal. That is what happened. That is what you must note. So anytime a transaction takes place, we record them in the journal. That is the first way transactions. That is what you must note. That is what you must note. So transactions are recorded in the journal. Now, when you record the transactions, we now post them from the journal to ledger account. So after journal, we move to the ledger. We move to the ledger of accounts. So when transactions are recorded in the journal, after that, we post them into an account called ledger of accounts. When you hear the word account, what does it mean? Account means account is a book. Account is a book that is used to record business transactions. So journal is used to record business transactions. When you move from journal, you go to another book, that is, you post it from the journal, that is, you are moving from the journal. So the same transaction, you move it from the journal to the ledger of account. When you are moving from the journal to the ledger of account, we call it posting. Posting, account posting. We are posting the transactions in the ledger of what? Account. That is what you must note. So it is used to record business transactions. It has two columns. It has two columns, debit side and credit side. The book is an account that is used to record transactions, that it has a debit side and a credit side. Debit side, and then the credit side. So I want to see an example of an account and show it on the screen for you to see how accounts look like. An account look like. So Account is like a T account. So we call the most saving is like a T account, which has a debit side and a credit side. So I'm searching on the net to show you that, and then you see how that one too looks like. So few seconds, I will just share with you for you to see how an account looks like. So I'm trying to zoom it. This is how an account looks like: the debit side and the credit side. So anytime I ask you to open an account, so all the transactions are entered at the debit side and a credit side. So every account has a debit and a credit. This is how an account looks like. So we can have several of them here that you are seeing on the screen. An account, the debit side is the left side and the credit side is the right side. This is what you must note. So everything, I'm trying my possible to demonstrate for you to know that this course is not just the book in front of you or the online book you have, but rather it also goes beyond the book. You need to search for information by yourself for you to understand the issues that I'm trying to discuss with you. So back to the issues we are dealing with this afternoon. We said that from the leisure account, we go to the from the general, we go to the leisure. Now, when you move now, when you move from the leisure account, we try to summarize. So all the recording are done over here. So I told you that recording is first done in the journal. Later on, we post it to what? To the ledger of account. So accounting is a systematic process of recording of business transaction, and all the recordings are done where? In the journal. From the journal, it moves to the ledger. That is the definition of what accounting. So still with the definition is what we are playing with for you to understand the issues about what recording. Because we said it's a process. Now, when you record the business transaction by identifying it, the next thing is that you now summarize. Summarize. So accounting, when you record a transaction, you now summarize. You now summarize. So summarizing means that you are ensuring that the transactions are well known to you. Summarizing means you are trying to determine the totals. Summarizing means you are trying to determine the totals. That is what you must note. That summarizing means you are trying to determine the total of the transactions. So when transactions are entered into the account, we try to gather all of them and summarize them together. So all the sales you made, you summarize it. All the sales you made, you summarize it. All the purchases you made, you summarize it. All the expenses you paid for, you summarize them. That is what we do in accounting. So we summarize the information, and after summarizing, we try to communicate it. We do communicating. So after summarizing, we communicate. After summarizing, we communicate. So when we communicate, what are we going to do? We are communicating We are communicating. Please, can you all see my slides? Hello?
No, please.
No, sir.
You can see. Okay, so please hold on for me. It's not clear. Okay, so hold on for me. So I'm presenting again. Hold on. Okay, so now we can see, right? Yes. So after summarizing, so we do summarizing to know the totals. Then afterwards, we communicate. We communicate. So now, how do we communicate? We communicate using financial statements. So communication is done using financial statements. Now, note that when you want to tell someone something, you need to present it in a way for the person to understand whatever you are presenting. So some point in time, you'll be doing presentation, and I'll give questions to you to go and solve and come and present for me to see whether you understand the concept I was trying to teach. So what happened here is that if you are communicating using the financial statement. And we have 5 main financial statements. So we call it component of the financial statement. We have 5 main financial statements. The first financial statement is called statement of profit or loss. Some people call it income statement. It means the same thing. Some people call it income statement. So if you want to know the profit of the business, we can use the statement of profit and loss to know the business. If you want to know how you have performed, whether you made a profit or you made a loss, we use the statement of profit or loss. Another statement is called statement of financial position. Statement of financial position. Statement of financial position is what people say balance sheet, balance sheet, balance sheet. So if you have not done accounting before in SHS, but you must have heard people saying balance sheet, balance sheet, balance sheet. What it actually means is that they are talking about statement of financial position. They want to know the health of the business. That is what it means. They also have statement of cash flow. Is another component, statement of cash flow. Some people call it cash flow statement. Some people call it cash flow statement. Then we also have statement of changes in equity. Statement of changes in equity. And the last one, they have notes to the account. And I'll explain that. So if they want to communicate to us, if a business wants to communicate their performance, if they want to communicate their financial position, they use what we call this financial statement. That is statement of financial position, statement of profit or loss, statement of cash flow, statement of changes in equity, and then note to the account. So by communicating, they communicate using the financial statement. Now, when they are communicating, they want to tell us their profit. They want to tell us the resources they have. They want to tell us the people they owe. They want to tell us the expenditure they have made. So, if they want to tell us the profit they have made, the expenses they have incurred, the resources they have, the people they owe, the people who are owing them, they are communicating some particular things. And those particular things, we call them elements of the financial statement. So we also have elements of the financial statement. And the elements of the financial statement, they are those items that the business will communicate through the various financial statements you saw here. So if they want to communicate something concerning their sales, their purchases, their assets, their liabilities, you see them over there. So elements of the financial statement, we also have 5. The first one is asset. We will define it later. The second one is liabilities. The third one is expenses. The fourth one is income. And the fifth one is capital or equity. So if you search this thing on the internet and you type element of the financial statement, you get this. So if the business wants to communicate their asset to us, their resources they have, they will use the financial statement to tell them that, okay, the whole year, this is our asset. The whole year, these are the people we are owing. The whole year, these are the expenses we made. The whole year, this is the income we had. The whole year, this is the capital we have. They use the financial statement to communicate these 5. So before they can communicate these 5, they need to know the values of these 5 so that they can communicate in the component. That's the financial statement. So if they want to talk about the expenses and the income, they will use statement of financial, statement of profit or loss. If they want to talk about the expenses, so if the business wants to talk about the expenses and the income, so if they are talking about the expense and the income, then they are using the statement of what? Profit or loss. So note that if the business wants to talk about the expenses and income, they use statement of profit or loss. If they want to talk about their financial position, if they want to talk about financial position, that is, if they want to talk about their assets, they want to talk about their liabilities, I'll later define all of them for you to understand. If you want to talk about their capital or equity, they use a statement of financial position. If they want to talk about all cash transactions, cash and bank transactions, all cash and bank transactions, they use the statement of cash flow. If they want to talk about movements in their equity items, later on I'll explain what you mean by equity. If they want to talk about movement in their equity items, they use statement of equity, changes in equity. If they want to talk about the principles, the rules, the standards, the concepts, the computations of all figures, they will use the note to the account. So if they want to talk about the income and expenses, if they want to talk about the assets and liabilities, if they want to talk about the cash flow, if they want to talk about the movement in equity, if they want to talk about the rules, the principles, the standards, the concept, the computation of all the figures, they use this financial statement to do that. So that is what we do. So in accounting, they record a transaction and they tell us the story. The story is that they tell us the story through the financial statement. So if a business wants to say, I have made more profit, the business will say it through the financial statement. If they want to say, I have more people I am owing, they will say it through the financial statement. If they want to say they have more cash at the bank, they will say it through their financial statement. So all the financial statements you have over here is a way of communicating, is the way of telling the story about whatever resources he had. That is what you mean. So accounting, by definition, is recording of business transaction and the reporting of financial information. So they report and then they will report. They record and they do what? They report. So that is what we mean by accounting. They record and they report. When they report, they are reporting through the financial statement. When they are recording, they record it in the books. Now, one aspect, if you are doing the recording only and you are not reporting, again, if you are doing only the recording and you are not doing the reporting, you are doing what we call bookkeeping. Bookkeeping. So if you are doing only the recording and you are not reporting, you are not telling us the story, you are doing bookkeeping. But if you are doing the recording, so this one is only what? Recording only. But if you do the recording and you report, you do the recording and reporting, it means you are doing accounting. So accounting is not just about recording. When you record, you need to what? Report. So accounting is different from bookkeeping, because bookkeeping is about recording only. So if anyone over here can do recording, so that, for example, Charles, if I put Charles in a shop to take care of me, take care of that place for me, to be recording the transaction, though he's not an accountant, but he's recording. But when I come and pick the information and I put them in order and I now tell the whole class that Charles was able to record a transaction, and this is what we had for the year. If I am doing the reporting at the same time, what I'm doing accounting. So accounting is different from recording. That is what you must note. Accounting is different from recording. When you record only, you are not doing accounting, you are doing bookkeeping. So that brings us to this slide, saying that bookkeeping is the initial part of recording of what? Accounting, and focus on only recording of data. But accounting, you collect, that is, you identify. So collecting means you identify. Analyzing means you want to decide where to place the transaction. Then you now record it. Then you summarize it. When you present, it means you are communicating. And then you interpret. So this is where another issue comes in. When people want to interpret something, they want to get the understanding of it. And we are interpreting it because we want people to know what has happened. So if they are interpreting it, then it means that they are telling us the story. That is what must happen. So accounting, you collect the information by identifying it. You analyze it, you are thinking through, where should I place it? If you are able to think through where you place it, you now record it in a book. When you are able to record it, you summarize and you get the totals. If you are able to get the totals, you now present by communicating. When you present, then you now do what? You now interpret it for people to understand. Remember that it's only items that can be recorded in monetary terms is what we deal with. So if it cannot be monetary terms, we do not record it. That is what you must note. Now, when you are recording, you need a source document. Note that. When you want to record something in a journal, you need a source document. When you hear me saying source document, so we are doing the recording. Recording, you need a source document. Recording in the books needs source document. When we say source document, it means an evidence of the transaction. Evidence of transaction. Evidence of transactions. Evidence of transactions. So when you go to Melcom and you buy something from there, they'll give you receipt. When they give you receipt, is the evidence of the transaction. When you go and then sell something to someone, you say, please give me. The receipt is the evidence of the transaction. The evidence of the transaction. So anytime you go and deposit money at the bank, they'll give you a receipt or a deposit slip. It's an evidence of the transaction. So anytime you are recording something in the books of account, you need what we call evidence of what? Transactions. Before you can. So you need what we call source document. So examples of source document, example of source document. Can you mention some to me? Samples of source document. Can you raise up your hand and then you mention pay what I've said? If an evidence of a transaction has taken place, can you search for some and tell me source document? Can you give me an example? You raise up your hand, then I call you. Yes, Randy. Randy said invoice. Okay. Yes, James. James said pay in slip, pay in slip. Yes, or deposit slip, deposit slip. Yes. Who else again? Evidence of transactions taking place. Kennedy. Honorary certificate also is a source document, but then it doesn't contain the amount, so we can't use that. Right. Okran. For Okran said bank check. For check, we have what we call check counterfoil. You see that when they take out a check. When they take out a check, there's a portion remaining. The portion remaining is the check counterfoil. Okay, Samuel.
The credit note.
Samuel said credit note, correct. Emmanuel Misa.
Payment voucher.
Emmanuel Misa said payment voucher. Thank you. Then I go to Kingsford. But Kingsford said bank statement. That is correct. So now, okay, let me pick the last one from Emmanuel Bedu. Emmanuel Bedu. He said, I didn't get you. Vincent. Agreement document also can be a source document, but for now, we will not going to use it for now. So let me just wrap it up and say receipts. Receipts is fine. So for now, let me add here, etc. You can search for the information. So receipts, when you go to so Marfo said, the lady said, why receipts? You see that when you go to you go and purchase something from someone, you ask for invoice, and when you pay the money, they'll give you receipt. The receipt can be a sales receipt or purchases receipt. It's the evidence of the transaction that has taken place. That is what you must know. So receipt also will contain the amount that you paid for. So it's an evidence of the transaction. So all these things are used to record the transaction in the book. So any transactions that occur, you need a source document. You need a source document. Note that. So then, what is the difference between accounting and then bookkeeping? And I have it here, saying that bookkeeping involves collecting, analyzing, and recording financial data. Yes, indeed, it's true. Bookkeeping is just recording of transaction. You collect, you identify, you analyze, then you record. But for accounting, it goes beyond the recording. For accounting, it goes beyond just recording, because you need to summarize, you need to communicate, and you need to interpret. You need to summarize, you need to communicate, and you need to interpret. With bookkeeping, anyone can do the bookkeeping. That's why I said Charles can pick up a document and start recording. Charles can start recording with just a notebook. There's no legal requirement. Anyone can do it. But with accounting, you have to follow a laid down, because it's a systematic process. So there are rules governing the recording of the transaction and the reporting of the financial information. That is what you must note. Then with the bookkeeping, there is no defined book. That's why I said you can use what? A notebook. You can use what? A notebook. But with accounting, we have a defined book. You heard me saying journal. You heard me saying journal. You heard me saying ledger of what? Account. Ledger of what? Account. So in that ledger of account, with accounting, there is a defined book. But with bookkeeping, there is no defined book. The person who does the recording in bookkeeping is called a bookkeeper. Some people will say account clerk or account clerk. But the person who does the work of accounting is called an accountant. The person who does the work of accounting is called an accountant. So you see that these are the difference between the two. Bookkeeping is about recording only. Accounting goes beyond bookkeeping. Bookkeeping, there are no strict and legal requirements. But with accounting, there is a well followed down legal requirement on how to do. Bookkeeping, you can record it anyhow. But accounting, we record them in a defined account. Then as well too, in accounting, the person who does the recording and the reporting, or who does the work of accounting, is an accountant. But the one who does the work of what? A bookkeeping is what? A bookkeeper. Thank you. So, accounting goes through processes. The accounting goes through process. You first have to collect. You first have to collect the information and you analyze it. When you analyze it, you now record them by putting them in the journal. So this time you are putting it in the journal. When you put it in the journal, then you now post it into the ledger of account. You now post it into the ledger of account. And from the ledger of account, you now summarize it by balancing it off and extracting the balance. You now summarize it and then extract it like that. Then you now prepare the financial statement. Then you do all the corrections. Then you now analyze and what? Interpret it. Someone asked whether we can use Excel for our spreadsheet for recording. Yes, you can use it. That is what they do. So you can record it in a notebook or you can record it in an Excel. So now that we are in the modern age, that we are using computers, it will be very good if you use Excel to record the transactions. It is very, very good. It helps you a lot. And that is what I normally do when I'm recording transactions for people. So most often, you see the green aspect. The green aspect happens at the end of the year. The green aspect happens at the end of the year. But you collecting and generalizing it always happen continuously. So like today, someone come to buy, you record. Someone come to buy, you record. And then later on, you put them into their ledger of what. So my issue is that your reading assignment is to look for what is the purpose of accounting. So your reading assignment is to search for the purpose of accounting, and you can use internet to search that purpose of accounting. Purpose of accounting. Maybe you are just there, you can search and then tell me some two of them and then we can go. Purpose of accounting. Who will search for it on his phone and then share with us? Purpose of accounting. What are the purpose of accounting? Can someone search for it and tell us whatever the person does? So purpose of accounting. You can just go to Google, use your phone, search for the information. We are encouraging. So Francis has raised up his hand. Let me call Francis first. Francis, what did you find out?
The purpose of our accounting, we have so many purposes. The first one is it tracks financial transaction.
So hold on. So Francis said that the purpose of accounting is to track financial transactions. Track financial transactions. To track financial transactions. To track financial transaction. And what else again, please? Yes.
We have it also provide information for making decisions.
Someone said to provide information for decision making. To provide information for decision making. To provide information for decision making. Okay, Francis. Okay, let me call John. John Mensah, what did you find out? John Mensah, raise up your. What did you say? What did you find out? Okay, Millicent is ready. Millicent, can you talk? Millicent said to keep proper records. Yes, indeed, it's true. To keep proper records is good. It's good. Thank you. Yes. Then I pick Felix. Felix, what did you pick? What did you say, Felix? For planning and forecast, you can type on the at the message box also as well. For to plan, it's just for plan and forecasting. That is good for plan and forecasting. Someone text in the text box and said that to prevent errors and fraud. Indeed, it's true. Purpose of accounting helps to prevent error and fraud. So I'm doing this thing because you need to be able to search for the information and tell us. Okay, you've all done well. Let me continue. The next thing to learn, the next thing for us to note, please, if it was the purpose of accounting, we are done with that. If your hand is raised because you want to ask a question, then I will call you. But if not, and you are going to talk about the purpose of accounting, then please, we are done. Emmanuel, do you want to say something else apart from the purpose of accounting? Emmanuel Bedu. Right, thank you. So can you put your hands down? Thank you. Okay. Now, for an accounting information to be good information, it must bear some qualities. It must bear some quality. So accounting information, for it to be good for you, for decision making, it must bear some quality. So we have qualities of accounting information. So the qualities, we can group them into two: fundamental accounting quality and then enhancing accounting quality. Fundamental accounting quality and then enhancing quality. Now, when we say something is fundamental, it means you need it. It is a foundational. It is the foundational. It's the foundational one. So if something is fundamental, what it means, it is relevant. So the first one is relevancy. Relevancy. If an accounting information has good quality, it means that information is relevant. Yes, Claudia, the recording will be posted to you later. Okay, so the information needs to be relevant before we can say the accounting information is of high quality. The accounting information is of high quality. That is what you must note. Now, when we say something is quality, it means it is relevant. What it means is that it can affect the decision that you want to take. It can affect the decision that you want to take. So if someone wants to make a decision and you tell the person, oh, your profit was 20, and if the profit is relevant, it means that if the decision you are going to take, would you go and give the money to the business, or you buy the product for the person, or you not buy the product for the person? It means that information is relevant. When we say an information is of high quality, it means it was faithfully represented. When we say something is faithfully represented, it means the information is complete. The information is free from error. The information is neutral. There is no biases. That is what we say the information is faithfully represented. Then as well too, if the information is of high quality, it means the information is material, and that if you omit it, if you don't use it, it will affect the decision of what you intend to do. So if something is material, it means that information is of high quality. So the class UCC that you've come to school, you came to UCC, there are certain information that they are material to you, you need to note. For example, the time for lectures is very, very important. The link for the lecture is very, very important. Your quizzes, you need to take part. You don't need to absent yourself. You need to avoid IC. You don't say, I'm not going to write the examination because I think it is difficult, so I'm not going to write. No. Always you need to go and sit for the paper. Because if you don't go and sit for the paper, you are going to fail if you sit it by alone. So always you need to sit with your colleagues and ensure that you learn together to pass. The link will be available. Since you're on the same page, we advise that you create groups, you link up with your colleagues. Later on, we will open the floor for everyone to open the video for us to see each other, so as to know wherever we find ourselves, so that we know how things are. So when we say something is material, it means its omission can affect the decision of the user. Then we also have the enhancing one. When we say something is enhancing, what it means is just a secondary qualitative. It means we can easily compare. So if users, I'll talk about users later. But when we say something, an information has the quality of comparability, it means you can compare the information against other information because they were consistent in using or coming out with the information. For example, maybe last year, when you were trying to determine your profit, you used a particular method. This year, you have used the same method. So since you used the particular method last year to determine the profit, and just as at 24th January, you have used that same method, you can compare the information this year against last year information because you use the same method. So if we use the same method in the preparation of the account, we can say we can do comparison because we were consistent in what? In using the same accounting method. If an accounting information is of high quality, it means we understand it. It has the quality of understandability. People who say it can make meaning. So if Lydia, Letitia, Abigail, Francis, Aisha, Emisa, Francisca, Andy can make meaning out of the figures showing there, it means that information is understandable. But note that understanding of an information accounting is based on the user, and we are going to learn the users of accounting in no time. Now, if an accounting information is of high quality, we can easily verify the information. We can easily verify the information. And the last one, meaning that there was what? A source document. So if you tell me that you are going to put money at the bank, the only thing I'll ask you that, show me the evidence. And you say, oh, say, please, I deposited 5,000 into the company's account. Show me the evidence. Oh, this is the receipt from the bank. And I'll say, oh, okay, indeed it's true. We can verify the transaction. If you go and buy something from somewhere, you always demand receipt because you know that your bosses will ask you, where is the receipt? Where is the invoice? It means the information can be verified. If an information can be verified, we say that information is of high quality. And when the information is of high quality, it means it should be provided on time. It should be provided on time. If the information is provided on time, it means the information is of high quality. If the information is provided on time, we can now use it for decision making. If the information is provided on time, we can use it for decision making. That is what you must note. So, note that accounting information needs to be of high quality. One of the qualities is that, one, it should be of relevant. Two, it should be faithful representation. Three, it should be of material. Four, it must be verifiable. Five, it must be provided timely. Six, it should have comparability. Seven, it should have understandability. There should be understandability. That or should be understandable. That makes it what? Quality. That is what you must note. Now, accounting has limitation, and I'm taxing you tomorrow. I'll ask you tomorrow. We have a lecture, and then I will check the timetable for you so that we will meet. We will meet for 1 hour tomorrow, and the 1 hour tomorrow, let me just check and then tell you so that you can all be abreast that tomorrow there's going to be an 1 hour class with us. And give me some few minutes. Let me check the 1 hour for you so that tomorrow you all join the same link. Tomorrow, the 1 hour is at 10:30 to 11:30 after your information literacy class, after the live streaming of the information literacy. Right after it, right after that 1 hour, you are coming to class to come and continue on the class. So note that. So note it in your calendar that tomorrow we are having the 1 hour class. It was supposed to be 3 hours. Now let's continue. So note it down that tomorrow the same link, the same time. Now, what am I saying? Tomorrow, before you come to class, you should be able to know the limitation of accounting information. So you are going to search for the limitations of accounting information. That is for tomorrow's class. Limitations. It is on the internet. You search for it, you write it, the limitation of accounting information. You have to search for it, and then you come and tell me tomorrow. That is your first assignment. And I will note it down because you are going to do presentation. All those who will be talking, I'll be noting your names down, and I'll be picking your index number later so that during your presentation, I'll give. So the first thing you need to note is that you are going to search for limitations of accounting information. Now, note that accounting also have branches. Accounting has branches of accounting. We can have financial accounting. That is what we are doing. You have cost accounting. That is what some people will do when they get to level 2 and level 300. We have management accounting. We have auditing. We have taxation. We have public sector accounting. We have hospitality accounting. We have sustainability accounting. Non-profit making accounting, the churches. The people who are there not to make profit. Islam, they don't make profit. Churches, they are there not to make profit. This non-profit making organization, they also do account. It's also a branch of accounting. Financial accounting is what we are doing, but we are doing the foundation. Cost accounting is there. They are all branches of what? Accounting. They are just there. So with financial accounting is to prepare financial statement, position, and that. Cost accounting is determining the cost of an item. And we have management accounting too. But note that there are differences between financial accounting and management accounting or cost accounting. Financial accounting, you record business transactions and then you report the financial information. But management accounting is much more of decision making. And cost accounting is much more of determining the cost of an item. So if you see a carpenter making a table, the first question is, what went into the making of the table? There was a wood, there was glue, there was nail, there was hammer. So in determining what makes up the cost of that table is what we call cost accounting. So if you tell us that for that table, there was material, there was labor, there was other things that make up the cost of the table, is cost accounting. But management accounting is using the information from the cost accounting to take decision. So if you go and buy something and you decide to sell it at a particular thing, a particular price, it's management accounting. The decision whether to cook or to buy food is management accounting. So management accounting is for internal use. Financial accounting is for external use. That is what you must know. So in your book, you see something like this. Accounting is much more of recording and reporting. Management accounting is about using the information for management functions. Accounting is done quarterly, semi-annually, and that. And then management accounting is prepared daily. Management accounting is optional, but financial accounting has a legal, it is compulsory. That is what you must note. That is what you must note. Now, there are people who need the accounting. There are people who need the accounting information. Who are they? We call them users of accounting. The people who need the accounting information, we call them users of what? Accounting. So we have users of accounting information. The owner of the business, the investors, the creditors, the government, the employees, the management, the customers or the consumers, they all need the accounting information. The owner of the business, he needs the accounting information to know whether the business has made a profit or has made a loss. Whether people continue to buy their product or do not buy their product. That is the owners of the business. If someone is an investor, it means the person has what? Invested into the business. So if the person has invested into the business, what will happen? We expect that the business should gain more profit so that the person will enjoy the benefit of investing into the business. But if the business is making losses from the accounting information, the investor will not go in again to invest into the business. So the business will end. So the owner will not go into the business. Creditors, they are the people who give us goods on credit. They are the people who give us goods on credit. So creditors, they are also users of accounting information. They want to know whether we can pay our debt when it's fall due. So if someone give you something, he expects that for you to know whether you can pay the debt when they fall due. And we have government agencies. They are also interested in the accounting information because they're interested that the business will be able to pay taxes. The business will be able to pay to give employment to people. The business is also not polluting the environment. So government agencies are also interested, like the GRA, they're interested in the accounting information. We also have employees of the organization. They are also interested in the business because they want to know whether they will be able to be employed in that organization. So employees want to know whether they will be employed in the organization or they will not be employed in the organization. So what happened is that they want to know whether indeed the business will continue to give them employment or will not give them the employment. So they are interested in the profit of the business. They are interested whether they will continue to get their salaries or they will not get. They are interested in that. They are also interested whether they will get bonuses or they will not get bonuses. Customers or consumers, they are interested in the business product. They are interested in the business product. Whether the business will continue to provide the business, continue to provide their services or to not provide their services. Then we also have management. Management too are interested in the organization to know whether indeed everything is going well, to know whether indeed people are served right, to know the profitability of the business and see whether they can improve upon their performance, and also to know whether the business will continue foreseeable future. So before we end the class, I want to say that this class is a combination of become people, beard people, and then as well to IT people. We are all doing this thing together as people, one people. So kindly note that tomorrow at 10:30, we will have our 1 hour class, and we must join. The education people and then the IT people, the beard education people and the IT people. If you have a class at that time, don't worry. We are going to do something right now. You see that we are all on this page. I am going to, before we all leave, so don't leave, I'm going to share with you a link. I'm going to share with you a link right now. I'm going to create a link right now and put it on the page right now. On the chat box, you copy it from your phone. Then you enter into that group. That group will be our accounting class only. Again, so all information, if you need slides, I'll put it there for you. If you need any document, I will put it there for you. So I am going to create a group right now. So don't leave online. Wait till you join the group. Please, I said, wait till I paste it there, then you join the group. So as you join the group, I will put all I'll put all slides. So I'm creating a group called Accounting Foundation of Accounting. Accounting 1. Foundation of Accounting 1. So I'm creating it, and then I will Foundation of Accounting. So I'm going to share it right away in our pages. Sorry, not in our page, but on this link right away. Then all of you will pick it up and then will now join. So it will be in the chat box. If you are able to enter, you give me a thumbs up. That is, if you are able to enter into the new group that I'm creating for us only. So this one is not a general group, but it is for only our accounting class. That is where I can place all the documents. So check in the message box. I have placed it there. Click on it. You'll be allowed to enter. So as you are doing now, just be joining and let me see. It is open. Just be joining, but don't leave the line. Just be joining. Yes, people are joining. Just be joining the page. Just click on it and just join. That is where I will place all information. So just be clicking on it and join. Just be clicking on it and join. So just join there. All slides. If you need slides, it will be there. If you need questions, it will be there. That is where I will place all your information. So be joining. I could see a lot of people are joining. Please, if you have not joined, kindly join. It's very, very important because that is where I will place all information. Thank you for giving me thumbs up for joining. You've done well. So, God willing, tomorrow at 11:30, sorry, 10:30, we are going to meet there. Yes, Rose, your hand is up. I said go to the chat box. Go to the chat box and click on the link there. Go to the chat box and click on the link there. You get the information. So if you need slides, I'll put it there. If you need anything, I'll put. So that will be our official group we'll be using. So if there's a link for the class, all will be there. If during the week we are going to have a class too, we will all join there so that we have what? A successful class. So, Piet, oh, Delight, please click on the link. Everyone is clicking. Click in the. Please try your best. People have joined. People have joined. Please, a lot of people have joined. They are not finding it difficult. So you, if you are finding it very difficult, you will find a way to help you. You can post your telephone number here. I will personally add you on the chat. Post your telephone number on the chat box. If you are finding it very difficult, post your telephone number in the chat box. I'll be able to add you there. Please, on that same page, I beg you, don't be sending informations over there that are not necessary. We only need information that is going to contribute to the class. If you are the one who, if I catch you putting any information that is not important, please, I'll deal with you. I'm very, very clear about this. That place is for only learning. So please, if you are going to post anything there, post something that will benefit the whole class, not something that you abandon, they go and put it there. That one, if I catch you, I'll never spare you. Don't put memory verses there. No. Don't put preaching there. Please, no. Only put something that is accounting. If it is a video you watch and accounting, place it there because that place is only for accounting. Only for accounting. I'm serious about this because if you put it there and I call your number and I found out that you are in my class and you post it there, you never take it lightly for me. So please, let us be straight with all those things so that we do the right thing. So please, God willing, we will do that. So now, any question from the class? Juliana. That's fine. That's fine. That's fine. That's fine. You're welcome. I'll add you. I'll add you. So you test your telephone number in the chat box. I'll add you. Please, I will. I'm in the class. When I finish, I'll add you. Okay. I'll add you. Right. So thank you very much for coming. All other information we posted on our page. We will have a successful meeting. And I know very well that with these meetings, you will get it and understand. So let me leave you. It's late. You had a long day. I expect that you will go refresh up and prepare for tomorrow's classes. Tomorrow you have economics and you have information literacy, which will be streamed online. Please, you have not joined the main level 100 group. Please join the main level 100 group where you can have access to information. So it will be streamed live. Make sure that all the courses that are streamed live, you joined. And all other courses too, that it is on your timetable to you stream there. I'll be on the level 100 page also, be answering certain questions. I will open it this evening to answer questions because I've locked it. So I'll be opening it for all of you. Any question you have on the level 100 page, you can ask, we will assist you, and we'll help each other. On that note, thank you very much for your time. I promise to be a good teacher. You can turn on your video for us to see where you are. Don't talk, but just turn on the video. Let us see where you are. Let us see whether everything is fine. Okay, I'm seeing people. Don't talk. I said just turn on your video. So I'm just closing the sharing of the page, the online. I want to see your videos. I want to see you, see how you are doing. Okay, that is good. That is fine. I'm seeing all of you. Yes, indeed. You are welcome to UCC. I'm hoping to become a good teacher, you to become good students, and I believe that everything will be well. Right. On that note, thank you all. I am Emmanuel Asamoah. As you see my name there, your humble teacher from Department of Accounting. Thank you all, and have a good evening.
Thank
Right.
you.
Thank you, sir.
Francis, I think you're